Alright, ladies and gentlemen, in today's video, we're going to be covering my entire trading system that I've been perfecting for the last 7 years. Now, we're going to take a look at almost every single little bit that goes into the system itself. So we're not going to be covering just strategy, we're not just covering risk management, but literally every single thing that goes into it, we're going to talk about that. Now, by the end of this video, you guys should have a really good understanding and be able to replicate my system and replicate these results. So with that being said, let's go ahead and take a look at my trading results for the past few months and really understand every aspect of being a profitable trader. So if you guys take a look right here, we're on my TradeZella and we're looking at the stats from May 1st all the way until July 30th, which is about 3 months. Now, as you guys can see, net PNL is sitting around 63K. We're sitting at a profit factor of 3.72, win rate of about 67%, and average win/loss of 1.82. Now, these are honestly some pretty solid numbers. You guys will notice I'm not really doing anything crazy. I don't have a really insanely high win rate. I don't have some crazy risk to reward ratio. They're all just some pretty solid basic numbers, right? So there's nothing really crazy about my strategy itself. Now, as far as my PNL and everything goes, it's kind of all over the place. For example, May we did 16K, in June we did 28K, and in July we did around 20K. So it's not really consistent. Some months are great, some months are a little bit lower. So it's not really just like outright every single month we're getting 20K profit or anything like that, okay? But what I really want to track right here is really taking a look at some of my best days and really understanding my worst days as well, okay? So real quick, before we get into the really good days, I want to take a look at my worst trading day that I had this year, which was in July, on July 17th right here, okay? So my worst losing day was 3 losses in a row. I took losses on all 3 of them, and I ended up catching about $1,900 in losses, okay? So it wasn't a solid day at all. I mean, every single trade I was taking was just failing. I booked my losses. You can see our stop losses are not that clean, and it was not really my best performance, all right? But I do want to show you guys kind of just the raw reality that we do lose. All these numbers do come into play. We do have to lose no matter what, right? Obviously, some of my other winning days and losing days are like not even close. For example, you have 262 right here, 122, minus 80.5, whatever. These numbers don't come close. But the reason I'm showing you guys this loss in specific is that my worst possible trading day, meaning 3 back-to-back losses on regular sizing, is going to be 1.9K loss, okay? And that's a very comfortable loss for pretty much my wins, right? If you compare, a regular win is sitting around like 1.93K. Some days are $3,000 wins, some days are 1.8, whatever it is. One winning day covers that loss, no problem, okay? What I see with a lot of traders is you guys might have like a really good run. You might be up like, let's say 10K this week. You let one bad day just completely wipe everything out, all right? In my case, I really try my best to control myself on these losing days and not go crazy, right? And that is a really key component of why I'm profitable, all right? Now, if we go back to the other weeks, you'll see some of my best wins are 3.5K, $6,240, whatever, 3.1K right here. This is what we need to have. All right, my winning days cover my losses completely. It's not even close. I mean, most of my other losing days, you'll see 843, 262, 194. Winning days come in at 6,240, whatever. But what I'm trying to say is the biggest thing for understanding why you're profitable is I don't oversize, number one. I don't really just go all over the place and start sizing 30, 40% of my portfolio. I do not do that, okay? You won't see me really over trading. I think the maximum you'll really see me take is like 5 trades in a day, which is kind of pushing it, don't get me wrong, but I don't really go into like some crazy territory, all right? But I don't oversize, I don't overtrade, and I do really just respect my rules, okay? I could have came back onto this day and been like, you know what, let me take a few more trades, let me try to make that loss back, and ended up in like $5,000 negative, right? Or it could have been a day like this Monday right here, and I could have been like, let me take 5 more trades, let me get to 20K profit now. You have to be very consistent with every single trade that you take. It has to be super consistent. Everything has to make a ton of sense. But before we really get into the system that I trade, I just wanted to give you guys a quick glimpse of what a profitable system looks like with my wins, my losses, my rule sets, everything just kind of aligning all together and forming a perfect system. Once again, nothing crazy. I don't have a 95% win rate. I don't have a 10.30 profit factor. It's all the bare minimum. Everything aligns perfectly, and that's literally all you guys need to be profitable. So now that we're done with that quick overview, let's go ahead and take a look at my exact system step by step so you guys can copy that exact same trading style. So here's what my system looks like. You guys will see I have all my rules and everything planned out right here. And this is kind of what we go over in the mentorship for new students to also give them an insight into kind of how you start correctly, but also for more experienced traders, kind of how you guys stick with trading itself, all right? So the setup I trade, let's first start off with that and kind of cover what I do. But if you guys have watched any of my videos, you know I trade the break of structure for rally gap model, which is just literally going to be a breakout followed by a rally gap, and we take our entry on the retest of that rally gap. All right. So what I do is every single morning I'll give the market like 10 to 15 minutes for price to settle. So I don't want to just take an entry right as the market opens because it's very, very volatile and you're not going to find good entries. Okay. So let's say this is 9:30 right here. I'll let it settle until like 9:45, which is right here, and let price form levels. Okay. Now, what I'm going to do after that first 10 to 15 minutes is mark out a high of day and low of day. All right. So in this situation, we have our most high point that price hit between this little time frame right here, all the way up here, and our lowest one right here. Okay. So I mark out both of those levels. I let that go. I don't do anything. I just let those levels sit there. All right. Now, what I'm doing is I'm waiting for price to break either one of those levels. Okay. In this situation, I really want to put a lot of emphasis on this because people get confused. All right. We got a break of the low. What am I doing? Absolutely nothing. The break itself means nothing. Okay. Because what happens is, okay, we got a breakdown, immediately reverses back up. So what am I going to do with this break? Literally nothing. This means nothing to me. Okay. Well, people say, well, we have a break and there's a rally gap right here. Once again, we have to get a breakout, then we can get a rally gap, and then I can take my entry. Okay. So if we have a situation with a setup like this, this is not something I want to play. Okay. Because the breakout happens, instantly reverses back up. Yes, there's a rally gap, but this was before the actual break happened. So no setup there, nothing of interest, even though we have a break and a rally gap technically. Okay. Now, the second setup at the high of day, which is right over here. This is great because we actually break that high. It doesn't just immediately reverse right back down and drop. So that's step number one. It forms a rally gap after the breakout itself. And we have our third step, which is that price pulls back into it. It respects the rally gap, and that's where we take our entry. Okay. So something like this means absolutely nothing to us. This is perfect. Okay. So just so people don't get confused, wait for the first 10 to 15 minutes. Some people like marking out the pre-market high and pre-market low, but this is just easier in my opinion if you're a new beginner or just general any trader. It's going to be a little bit easier for you guys. Okay. So once again, breakout for rally gap, retest right here is where we take our entry. Now, another very key component of what I trade is called relative strength and relative weakness. And this is something that honestly applies to really any trading strategy, but especially for continuation setups, it's going to be very, very important. All right. So what I do every single morning is, let's say if I'm trying to play a stock like Nvidia, Tesla, Amazon, AMD, whatever, those are all in the same exact sector. So they're all tech stocks, right? What I'll do is I'll take a look at, let's say AMD is moving strong, Amazon's moving strong, Nvidia is moving strong, and then all of a sudden Tesla's breaking low of day. So that is what I call relative weakness, meaning that everything else is pushing up, but Tesla is rejecting down. So just to quickly draw that out, this is AMD, this is Amazon right here, this is whatever, Nvidia, and then this is Tesla. Okay, I want to play this setup right here. The one that is going against the market is usually going to be the one that has all those sellers packed in or all those buyers packed in. You want to look for the break of structure for rally gap on that setup mainly. All right. So you combine these two together. That is going to be your main strategy. All right. That is the main thing we look for. Everything else after that is kind of just pretty simple. All right. So relative strength, relative weakness, break of structure for rally gap with these exact rules, going to be absolutely top tier. All right. Now, the tips for the break of structure for rally gap. We only want to trade the first hour and a half to 2 hours of the market open, because if you go anything past that, it's a little too slow. Does that mean you cannot trade it? You can still trade it, it's just not going to be high quality. Okay. So ideally stick to this. Sometimes people take trades like at 2 p.m. Eastern time and it still works. But I personally just don't do it because I want to trade the highest quality setup that I can find in the market. Okay. Now, the second thing you want to cover, you only want to trade the 1 through 5 minute time frame only. So I'm not interested in going on like the 15 or 30 minute time frame and trading the setup. It's only going to be the 1 through 5 minute because we're day trading. Okay. We're not going to use the 1 hour for, going on the break of structure for rally gap. It's just not going to make sense. All right. Now, the last thing I want to cover is we only want to use this on high volume tickers. So what that means is if I find some random penny stock from the middle of nowhere, it's not going to work. There's no volume. You're the only one trading it. It's not going to get continuation. Okay. So trade things with a lot of volume. Tesla, Nvidia, QQQ, SPY, Amazon. Literally any ticker you see up here is perfectly fine. So that all is really clear right there. Let's take a look at probably the 90% of trading, which is something that everybody skips past and just looks at strategies only. But this is insanely important, and I think every single person watching this video needs to understand this probably the most clear way possible. All right? So, risk management. You hear everybody talk about this, but what does that even mean? Okay? Trading is two parts. Okay? Think of it like this. You have your strategy, so you obviously need that, right? But if you have terrible risk management, you're not going to make money. It's just not going to work. And that was why I was showing you that overview in the first part of the video where I was like, look, my worst losing days like 1.9k, my best winning days are like $6,000 or $3,000 or whatever. It's the actual controlling of the losses and everything like that that really adds up and makes you a good profitable trader. Okay? So, in order to be profitable, you guys want to follow every single thing I'm listing out right here. All right? So, in the exact order that we're going, let's say you have a $10,000 portfolio. Okay? What that means is you never want to over leverage or oversize. So what I'll do is I'll only use 10 to 20% of my portfolio on each trade. So $10,000 in your entire account, you only want to use $1,000 to $2,000 per trade. Okay? Anything more than that, you're oversizing. Okay? And some people will say, oh, well, what if it's just, I'm not getting enough profits, I'm not doing this, I'm not doing that. We don't care. It's more important to maintain safety in the markets than it is to be like hyper aggressive and try to go for some crazy trade. All right? We do not want to be doing that. It's not smart at all. You really want to stick to a decent sizing on every single trade. Okay? So, the next thing we're going to take a look at. Your risk to reward should be about 1.5 to 2R. So, if I have a 10% stop loss, I should mainly aim for about 20% target. Okay? If I have a 15% stop loss, I should look for about 25 to 30% target. Now, this is for options trading, which is what I do. For futures trading, you would just look for R, right? So what that means is if I'm risking $600, I would look to make about $1,000 to $1,200, right? Because that's double what I'm risking. So that is the main way I want you guys to think about it. You don't want to be in a situation where you have, like, for example, oversizing, you have a 25% stop loss and you have like a 15% win. I don't need to see that stuff because that is just what every single unprofitable trader does. They see like 25% loss. They see 7% win, boom, they'll take it. But they'll let that trade ride every single time to negative 25% loss. All right? So what I want you guys to really focus on a lot of the time is making sure your trade is hitting either stop loss or take profit. If it's not hitting one or the other, don't close that trade. Okay? You will have some situations, sure, price comes and takes out your stop loss after going like 7% into profit. That 7% profit is not yours. So the main focus I want you to understand is if it's not hitting target, it's not hitting stop loss, nothing else matters. All right? So set it, forget it, let that trade ride. That is the most important thing that I can really tell you guys because that is what forms a consistent risk reward system. Okay? Now, the third thing, ideally we want to aim for 1 to 2 high quality trades a day. Now, as you just saw in my TradeZella, full transparency, sometimes I take a few trades over. Not a good thing to be doing, but I'm human, I make mistakes. I also do the same exact thing. Okay? I'm not going to sit here and be like, oh, I only take 1 trade a day. Some days I go into 3, some days I go into 4. It's not ideal, but the main thing that I aim for is trying to go for 1 to 2 trades a day. All right? The more self-control you have, the more you can control yourself to only take those 2 trades, the better it's going to be for you. All right? Now, the last thing I want you guys to focus on is respecting your levels. So what that means is, it hits a stop loss, close that trade no matter what happens. Okay? It hits a target, close that trade. I don't care what's going on. You have levels, you need to make sure that you're respecting them. So I don't want to see a situation where it hits stop loss and you're like, maybe 5% more, maybe 10% more. We do not want to go anywhere near that stuff. All right? So all of these things combined together, guys, is going to give you an absolutely A+ top tier system. All right? You follow this, you're profitable. If you start straying away from it, you will be unprofitable. So this is what you need to follow. This is the exact layout right here. You can screenshot this. You can do whatever you want. I'm giving you guys the game. I need you guys to follow it if you want to be profitable. All right? So let's take a look at a few examples of trades that I've taken pretty much last week and kind of just mixed in from the last 3 months to explain kind of how we use this system in the live markets. All right? So in this situation, we have a very, very simple setup. Okay? We have a clean high of day, which we mark out, and we have a clean low of day. So what we do is we wait for price to break that level with strength. So in this situation, clean break. Okay, right here we have a very nice follow through with the 1 strong candle, 2nd strong candle, and then a fair value gap forms. So that's literally all I need. Strong breakdown, fair value gap, and that is it. Okay? Now the third thing I look for, and pay attention to this part because the price action of the actual reaction is so important, and people skip past this because it's a it's not really covered by other traders, so I really want to put a lot of emphasis on this. Okay? When we come into the fair value gap, I need to see some really good reaction. So what I do most of the time is I wait for a candle wick or something that flips from like green to red, let's say. So in this case, this candle opens green and it completely wicks and flips to red. That shows me that sellers are so strong in this zone that I can absolutely play the setup. All right. So the moment I see that flipped green to red, or I wait for the candle close, I take my entry. I am not taking my entry on this candle right here because it has not shown me enough confirmation. It's still a green candle. It's just wicking to both directions. Just wait. Be patient. Do not... Sometimes you'll miss a setup. Who cares? But what I really want you guys to focus on is, for example, in this situation, I see a... no confirmation there, but this gives me a good confirmation. So this one, I can take an entry on. Alright? Now, stop loss is going to go at the high of the middle candle. So in this case, it's not the start of the fair value gap, it's not the end of the fair value gap, it's the middle candle right here. So I'll place my stop loss right above the high of that middle candle. Alright? The next thing I look for is a next key level that we have. So what's the next pivot level that price has is right over here. Okay? So I'll mark out my target right there. And you'll see this is sitting about 2.79 risk to reward, which is way more than what we need, right? You can even go for 2R alone, not even go for that 1 hour level right there, but just simply target the 2R and just let it be like that, all right? So in this situation, the trade that we took was a SPY puts, right? Price comes into the fair value gap, respects, we take our entry, and we end up catching a really nice move down to that 1 hour low. So that is exactly what I was just talking about right here. Strong breakout, fair value gap, and take your entry on the retest and wait for price to respect the fair value. And if you guys come back here one more time, exact same thing, right? Price comes into it, respects, we take our entry and we target the next 1 hour high or low, which in this case is going to be right over here. All right. So that's one example right there. We're going to quickly just take a look at these and just understand how we would trade each situation. But it is a very simple setup. There's not a lot that goes into it. Just make sure that you're following the risk management that goes with it. Okay. So it's not just a strategy itself, but risk management wise is also very, very important. Okay. So let's take a look at this Tesla trade right here. Same exact thing. Strong break of structure. So the actual break itself is great. Now, fair value gap. Yes, we got a fair value gap after the break. So that's number 2. And what is the third thing that I wait for? I wait for a good confirmation candle. So what that means is, in this situation, this candle opens green initially. It flips to red. And that is a good rejection sign. It leaves a good wick. It's showing me that the sellers are strong, so I can take that entry on that trade right here on this exact candle. So in this situation, everything is aligning properly, right? You can see you have your fair value gap, your break of structure, everything is respecting, but we have one problem, okay? If I try to target the next 1 hour low, it's actually going to be a negative risk to reward. So in this situation, I'm not going to target that low. I'll just trade a specific risk to reward or percentage based trade. Okay, so what that means is I'll target like 1.5R on this trade, or if I'm trading options, I'll go for 10% stop loss, 20% target, whichever one hits first. All right. So that is the main focus, right? The only time where I'm not going to be using like levels based systems is if I notice the risk reward is completely off or something is just not right. That is what I'll go for. Okay. So again, same exact thing as we just had on SPY. Strong break of structure, pull back into a fair value gap. You wait for the confirmation of some candle giving you a reaction that it shows that price is actually respecting the fair value gap, and then you take your entry. All right, same thing on Tesla. Pull back, respect, take your entry. All right. So let's take a look at another one. In this case, to the opposite direction. So this was another trade that I took on NVIDIA. Same exact idea, right? Strong break of structure of a high of day level. Okay. Fair value gap forms. We get a very strong candle right here, you can see, and then we can take our entry on that candle right there. All right. Stop loss once again goes at the low of the middle candle. All right. I target the next high, which is going to be right here at the pre-market high. And that is the trade. This ended up catching me about like 50 to 60% profit, which is way more than what I kind of aim for. And that was just a beautiful trade from start to finish, right? Same idea across all of these trades that I'm taking. Strong break of structure, pull back into a fair value gap, take your entry. If it shows you a reaction, take that trade. If it doesn't, skip it. That's it. Okay? I am not taking my entry on this candle right here because this did not give me any reaction at all. It's just a red candle. Sure, it taps into the Fair gap, but there's no reaction. It's just a red candle. Alright? So ignore that. This is a good one right here. Okay? Now, we'll take a look at one more, just quick example again, one more time, just kind of go through that on QQQ. Now, what's special about this trade is a trade that you would lose on if you try to trade it. Why would this trade be a loss? Okay? So, we have strong breakout structures of the low of day levels, let's say. Okay? Price pulls back into the fair value gap. Let's say you took your entry on this candle right here. Why would this trade not work? It's a very, very simple answer. I'm sure a lot of you guys can already tell just right off the bat. There is no reaction. This is why I want to talk about this. Sure, maybe your breakout structure for value gap setup looks clean. Okay? It looks like there's a lot of selling pressure, there's a lot of this, there's a lot of that. It reverses, no strength over there. This next candle shows me nothing either, and it just breaks the fair value gap. Nothing happens, we move on from that trade. So many people I see that are trading my setup just take these random pullbacks into the fair value gap, and that is why you lose. It has to give you confirmation, then you can take that trade. Is that clear? So, really just a quick understanding of why did I take NVIDIA? Because there's a reaction. Why did I take Tesla? Because there's a reaction. Why did I take SPY? Reaction. Why would I not take QQQ? Because what is this candle? There's literally nothing that shows me that there's weakness on this candle. Okay? So I want to make sure everybody understands that. So, real quick. The setup is very simple. Every single trade that everybody takes, I wanted to make sure that everybody's following every single step of the system itself. So the setup is clear. Risk management has to be insanely consistent for you guys to be profitable. So with that being said, guys, that is my entire system from start to finish. You guys can see it's very simple, very clean. You don't need anything crazy to be profitable. And it's literally probably one of the simplest systems you'll find out there. So I hope you guys enjoyed the video. If you guys want to ask me any questions at all, or if you want to learn and see the setup live in the markets, join the Discord below. I'm always available answering questions for free in the chats. So make sure to join in the link below. It's free. You guys can join in and ask me any questions, or any of the staff, any of the other members, and everybody will help you guys understand the setup a little bit more. Also, let me know what videos you guys want to see in the comments below, and I'll make sure to get that out to you guys soon.